Before we get into the episode, a quick reminder that the last trade is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Now for a word from Onramp. Onramp is a Bitcoin asset management platform built on multi-institution custody. We serve high net worth individuals, institutional investors, and financial intermediaries with a best-in-class suite of products, which include multi-institution custody, a spot Bitcoin fund, Onramp Wealth for RIAs, and private wealth services for high net worth individuals. Leveraging our partnership with BitGo and other industry leaders, Onramp's multi-institution custody is a first-of-its-kind institutional-grade vault, requiring 2 of 3 institutions at any point in time to sign once a client's unique permissions have been met. Our multi-institution vaults utilize cold storage, key signing, and authentication at the direction of the client to maximize security for client assets. This pioneering approach to custody is the foundation of Onramp's financial products, which reduce counterparty risk associated with trusting a single institution. To learn more about how Onramp can help you secure a new or existing Bitcoin position, please visit our website at onrampbitcoin.com, where you can schedule a consultation and connect directly with our team.
What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
There's freaks everywhere. You all need to speak up. Don't wait for the perfect allocation mandate. Just buy Bitcoin. Just ape in. Ask for forgiveness later. The returns will speak for themselves. This is not financial advice. This is the last trade. Last episode of the year. Full Onramp rip. We got Brian Cubellis with us. Gentlemen, how are we doing?
We're doing well. Thanks for having me, boys.
Yeah, I don't think you have to thank us. It's like assume that you will come on it many times.
Yeah. Last time, Brian, we got into some very spicy stuff. So we'll see if this goes anywhere near that stuff.
No, if you recall, that was on Rabbit Hole Recap. We kept that for the freaks.
Correct.
It was both. The last time we talked about Binance, and some individuals on this pod thought they were going belly up.
I was wrong on that one. But the market rebounding.
What's the BNB margin call looking like right now?
Yeah, right. Because they really defended 200, and that was kind of the price point that I had penciled in as like they might be in trouble if the price goes under there. $200 per BNB, and then Bitcoin rallying kind of saved them. I think. I don't know.
But it's like CZ's like a Lannister. He just always pays his debts. He just continues to meet his obligations while, as our buddy Matt says, that the suits just want him to go underwater. And he just withstanding all the arrows, and he's going to sit in the background while his company just rakes in dough next year.
So
in the shadows.
The CFTC, the head of the CFTC, I forget his name. It's escaping me right now. He did, I think it was a Bloomberg or CNBC interview last week and said that he'll likely do jail time. It's like they're going after some federal prison time for CZ.
Wow. That would be quite something.
Yeah.
I did see that there is criminal prosecution that they're trying. I think that's unfortunate in the sense of it's more of probably like a poster child for it versus like actual substance. But yeah, it's like don't fight the Fed, don't fight the government.
Or don't.
Or
I mean, if the laws are unjust, you have a duty to disobey. Not saying that CZ does. CZ probably engaged in a lot of crime, particularly market spoofing, wash trading, a bunch of other
money
stuff.
laundering.
Is that what he got in trouble for? I thought it was just referencing, traditional OFAC sanctions and KYC, which is obviously a crime. But was he manipulating the market? And if he's manipulating the market, what market?
Yeah, I'm not aware of what the government has accused him of versus what he has been, Binance has been rumored to have done. So I'm fuzzy on where the line is drawn, but I know that there is ample speculation and screenshots of internal chats, talking about like how they effectively are a money laundering operation for, with regard to some clients in sanctioned countries.
Yeah, the interesting thing there is I feel like they probably did very similar to what Arthur Hayes did, where like they didn't have the dollar rails, but they had, money coming in and money coming out. FTX, they're all like in the same area of the market, this opaque version of like knowing your customer, what's happening. But the one firm that we know for certain was running a Ponzi and taking everybody's money is SBF. Everything else, I don't know like what's been proven.
And Celsius. I think it's pretty clear that Celsius was running Ponzi. Maybe BlockFi too.
Isn't it scary that how, like you just mentioned Celsius, I completely forgot about them. And like in a year, just the craziness that can happen where you're just like, it concerns me for next year because we're going to see crazy things happen again. And we're just going to like doomed to repeat.
Yeah.
But it's a great point though, that like, I mean, a year ago was the bottom and it felt so awful. Right. And that just doom and gloom was just a year ago. And looking forward a year, like the momentum has swung, the pendulum is going in the other direction. And we're probably right now at that like peak rate of change in terms of like sentiment from negative towards positive. And we could be downright giddy a year from now.
It's interesting. I kind of think we're in this weird spot where it's like eerily quiet. Like we're in this sort of Bitcoin echo bubble and chamber. And, we know that all the things that have happened over the past year that really position us in a pretty good spot going forward. But when you talk to people outside of that bubble and it's still, there's still so much unawareness about what's going on, the fundamentals.
That's what's so exciting. Because all these things are like there's writings on the wall for what's going to happen next year, and yet 99% of the world doesn't know just because they're not paying attention because they don't want to consider Bitcoin a real asset. Like the incredible information asymmetry just because people want to write it off as monopoly money and not pay attention to the mechanics and the ETF approval coming.
Yeah, I mean, a year from now we could be doing this show with our shirts off because we were just so ecstatic and.
Well, but before the shirts off episode, Jesse's giddiness just reminded me we have to do something special for the halving. Like we just has to be.
I mean, it is Jesse's favorite event in all of human history that happens once every 4 years. So
24-hour stream.
Pretty much. Favorite event in human history. You can't say that. But the most exciting future known event possible. There's no other known event in the future that's more exciting. I'll say that. I will claim that.
What about your wedding?
My wedding already happened.
But there was at that in the future planned. I'm just messing around, just to make sure.
At that moment in time, the wedding took precedent. Yeah.
Real quick question. We talk about a year from now being a bottom, feeling so bad. I kind of feel, and I may be wrong, but like the summer was even worse because it was like the doldrums. But what would you guys say? Was it like this time last year when the market's collapsing, or is it because we knew Bitcoin was fine? It was mainly the institution.
Right. There was a weird element to a full year ago where it was like, we know that none of this has to do with Bitcoin. So it was like somewhat cathartic in a way where it was like, all right, we're finally sort of washing out some of the bad actors here. Like this is a necessary means to an eventual end here. And then, to your point, like the summer was kind of like, okay, we got rid of those guys, but now we're still kind of just crabbing along here. Like,
we're trying to talk to people about Bitcoin. People are raising capital, trying to drum up business. And they're like, yeah, we're good. Everybody just died. Like the thing's over.
That's because it was so fresh in people's mind. Like the FTX, the SBF trial hadn't even happened yet. Yeah, the summer. That's why summer doldrums are real. You just go to a beach, you enjoy your time, you lay low, try to be as productive as possible. Then you pop up in the fall. SBF goes to jail. The ETF approval seems imminent. You start beating the drum again. Halving's 4 months away. The boys are back in town. Let's go.
We'll see how that strategy works for this summer. You're going to be like this.
Oh, we kid. So we do have a lot of notes in our Slack channel for this episode. I think before we jump into either a year in review or a year ahead perspective, there's a lot going on in traditional markets. Michael, you dropped a long list of bullet points that I actually do want to read through because it is pretty insane, just to highlight what's going on in the markets outside of Bitcoin right now. Then we can tie how Bitcoin is an alternative to this after we have a discussion on that. But it is pretty crazy. Last week, obviously, you had Jerome Powell come out post FOMC meeting and announce that they weren't going to raise rates anymore, but more importantly, began to signal more of a dovish tune. There are many theories on why he pivoted rather quickly earlier in the month. I believe December 3rd, he was adamant that rate cuts were not around the corner. That tune seemed to change last week. A lot of commentary around that, and here are the headlines since that happened last week. And somebody wrote, I've been working in finance for 15 years, and this was one of the craziest weeks I have ever seen. The S&P rallies 2.7%, now only 1.6% away from a record high. The Dow and the NASDAQ 100 hit all-time highs last week. The Fed held rates unchanged, expects 3 rate cuts in 2024, which is exemplified in their dot plots, which is one of the stupidest graphs in the world. Fed member John Williams goes on CNBC and says premature to be thinking about March rate cut. Volatility hits a 4-year low. Retail investors are buying the most stocks since March of 2022. Jim Cramer says the recession is not coming. Apple hits a new record high. China's central bank injects record monthly amounts into the financial system. Germany, France, and India stock markets hit all-time highs. U.S. CPI at 3.1% year-on-year in November, in line with expectations. Goldman Sachs expects Fed to start cutting rates in March, expects 2 back-to-back rate cuts of 25 bips. Alibaba hit a 52-week low. Pfizer hit a 10-year low. SEC holds a meeting with BlackRock to discuss its spot Bitcoin ETF. JP Morgan says Ethereum will outperform Bitcoin in 2024. Jamie just ruining his reputation in real time. It must be nice to be the biggest bank in the United States. You can say stupid stuff like this with impunity. 30-year mortgage rates now below 7%. U.S. retail sales increased by 30 bips in November. It was expected to be a negative 10 bip drop. An all-time high of Americans spending more than 50% of their income on rent, which is insane. Restaurant prices are up 24% since January of 2020. Former President Trump says the U.S. will have one of the greatest economic years the nation has ever recorded if he's elected in 2024. It's great. It's great campaign fodder. There was a bill introduced in the Senate that would force big investors to sell all the single-family homes they own over 10 years. And U.S. consumers are spending at record lows, and economists are mystified, struggling to forecast an endpoint. Crazy Americans, the economy's better. How come you're not spending? What are your guys' thoughts on all these headlines? Chaotic mix.
Yeah, I have a lot of thoughts on all that. It is a chaotic mix, and it's interesting that it paints this picture of recovery. Like, and the Fed is even kind of taking a victory lap about how they successfully achieved their soft landing. Look at us, we solved it. But I have seen some headlines floating around from like 2007, and there were quite a few like similar narratives going around in mid 2007. Which is to say, like, historically, when rates are cut is when shit starts to hit the fan, and the wheels start to fall off. Only when rates are cut, and it's not to say that the rate cutting causes that, but more likely that the Fed and policymakers realize, oh shit, things are not looking good under the surface. Time for us to start easing to try to stimulate the economy. But as we've seen over the last few years, when they change rates, it takes 18 months for that impact to flow through the economy. So they can cut rates now, but that won't really immediately change what's happening in the economy. What's happening in the economy is based on where, what rates have been over the last 18 months, which is very high relative to where they were for the prior few years. So the pain is still working its way through the system, and that's why the consumer is hurting. And yet stocks are up almost near an all-time high. How and why? Well, a big part of that story is we've been printing a lot of new debt to service our interest expense. We're having to issue new debt, and plus our deficits are already massive. So, on this show, I've talked about how I'd have to revisit the numbers, but we were on pace for right now. But recently we were on pace for like $6 trillion in additional national debt for the 12 months following the debt ceiling being lifted back in late spring. So where's the money coming from to bid up the stock market? Well, it's all this new liquidity in the system that is coming in, and the reverse repo facility is still being drawn down. It's not yet at zero, but it's close. So that's part of the liquidity coming into the system is capital flowing out of reverse repo and having to bid something, having to go from reverse repo into some kind of bond. And so there's actually liquidity at this moment, largely because of all the debt dynamics that are playing out. So that's why the consumer's hurting, because interest rates are high and the economy is actually in pain. And yet it looks like things are recovering because there's actually just a bunch of liquidity bidding up stocks and bonds right now.
Yeah, and I've got a couple of charts to really lean into this. Number one, the disconnection between stock markets, financial markets, and the pain that individuals are feeling. And then number two, the premature celebrations that may be going on. So Logan, pull up the second chart I put in there, that one. I mean, this is a pretty scary stat. The percentage of Americans married by birth decade. So if you were born in the 90s, that's around 30% right now. And for comparison, in the 1940s, about 95% of people were married by the age of 30. And the millennials, that percentage is around 30%. So 1/3 at least of what it was in the 1940s, which signals that something is structurally broken in the economy. I say in this tweet, hint, it's the money. People are not forming families. There's a number of factors that play into this, but I think economic stress is probably number one. And then the other chart, you can pull up, Logan, which is the second one, just highlights that we may be repeating exactly what happened in the 1970s. This chart's from EJ and Tony, which in that decade.
This one's remarkable.
Yeah, Brian, why don't you comment on this?
I mean, I just think it's wild to think that, the people at the Fed and the government have to know this chart, right? Like they know what happened in the 70s. And so they're sort of, engineering this quote unquote soft landing, but with full knowledge that, inflation could sort of get more aggressive again. And the reality is, I think at sort of, at best, CPI is a flawed metric, and at worst it's highly manipulated. And so, the reality of the situation is that the pain being felt by the average consumer is real, to Jesse's earlier point. But they've been able to massage the sort of perception of the economy through things like CPI, employment data that's double counting people, or even just, going back to the stock market, sort of seem to be floating, suspended in air, given, interest rates have been high for the past year and a half. I think part of that is the concentration of the S&P. And I think I posted a chart in the chat if you want to pull that one up, Logan. But this one is kind of wild to me. It's from Ensemble Capital. And it just shows basically the vast majority of contribution to the S&P 500 is 7 stocks, right? And so the average company out there, or, not even the average, some of the top 500 companies in the world, in the US, are probably, flat to down over this period. And this starts in 2019. And so the vast majority of sort of stock market performance has been 7 or so companies. And I think it's almost a convenient way for them to say, well, the pain isn't really here, because at the end of the day, like the main barometer, I think, for the Fed, whether they'll ever admit it or not, is the stock market. And so if this can sort of continue to float, it helps their sort of soft landing narrative in a weird way. Despite, if you look under the surface, it's really not indicative of what's happening in the economy.
Yeah, the stock market is not the economy. You think people would internalize this, especially after 2008 and years that have come and gone before. I mean, 2020, 2021, stock market roared, and there was just this inflation demon lurking in the background. And that, that's a big
Sorry.
What was that, Michael?
I was gonna say, do we think something like structurally broke with this like pivot? We saw gold rip about a week before, and then they were hinting hawkish, and then they just completely pivoted on that.
Yeah, well, there's a number of theories out there. One is that something structurally broke and they're aware of it and the rest of the market isn't, which is hard to believe because the market usually finds these things out first. And then the second is simply we're heading into an election year. Janet Yellen and President Biden's administration, who have been publicly counter-signaling Jerome Powell for months, sort of had a discussion with him. We're like, yo, we're going to need you to play ball here. He bent the knee. That's what I think is most likely.
Yeah, I find it fascinating. We talk about Bitcoin as being the last free market, and it kind of being the canary in the coal mine, both upwards and downwards when liquidity is getting stripped, or on the other side of it, it started running weeks before this happened, which is interesting.
Good point. Maybe that's the market alarm bell. Yeah. Jesse, you have thoughts on this?
Yeah, it's the last functioning fire alarm in global markets. So yeah, it does tend to hint at what's really happening. And yeah, the 1970s inflation parallel was something we put out a piece on in the spring, pointing out like this is exactly what happened in the 70s, because they did a few rounds of trying to fight inflation by hiking interest rates. And what you're really doing then is you're hurting consumption. And that helps bring down inflation, because it's part of the story for inflation is how much demand there is. So you can destroy demand and bring down inflation. But that's one of the variables, and the other is the amount of money, the money supply, and so every good represents some tiny percentage of the existing money supply, and when you increase the money supply, then the nominal number of units that like a car costs goes up, right? So the money supply matters, but also demand side matters for inflation. So you can kneecap the economy by hiking interest rates and making people feel pain, and they'll slow down their spending and bring down inflation. But then you create a crisis in doing so, and then you end up having to ease up and stimulate your way out of the crisis. And that's kind of the pattern that happened a couple times in the 70s, until they finally, were able to commit to super high interest rates to really break the back of inflation. And so we're kind of on the same trajectory here. And that's kind of what I've been expecting for the last year or so of this interest rate hike that we've been living under is working to hurt the consumer. And that brings down inflation, the rate of inflation, but it creates a problem. It creates a brewing crisis that requires an injection of liquidity, and then everything roars again to like the COVID stimulus again, and we'll have the next round of inflation if and when that occurs. And, I think it's just like I think it's human nature is part of it. I think it's like, it's no surprise that we're following the same trajectory of the 70s. It's we all have we're all dumbfounded at how we could possibly follow the same pattern of group think and group psychology playing out the same as it has before, but it ends up playing out the same because that's how groups work and think together, and you end up taking the same short-term measures like hurting the consumer to try to bring down inflation, while sowing the seeds for a medium-term crisis that results in a medium to long-term, inflationary stimulus. So we're just following the same pattern again, and brace yourselves.
Yeah.
I think part of what I like to anchor to is somewhat zooming out and not ignoring the sort of near-term realities of interest rate hikes and cuts. But Jesse, you talk about this a lot, and it's the long-term reality of the situation is that they need to inflate away the debt. Like that. Yep. That is what we know, and sort of the trajectory and how we end up there is much harder to predict with any sort of accuracy, because again, these are people in a room pulling levers at the end of the day. And so I think what I like to anchor to is the long-term, what we know, in that in order for, this sort of fiscal insanity to continue, they need to inflate away that debt at some point. And so that means more printing, and it means more continued debasement of the currency. And that's what ties back to the Bitcoin thesis, is this, known absolutely scarce asset that you can store your wealth in. So for me, it's not that I ignore the near term, because I think it's important, and certainly, commentary that people care about in markets. But I just try to anchor to what we actually know, and what we know the sort of eventual reality of the situation is. And that means they must print. So own something scarce.
It's such a good reminder that it's impossible to know what's going to happen near term. And the further out you look, the more the math dictates what ends up happening. And the math is knowable, but who knows what happens in the next year.
Yeah, Brian, going off of that, help us. You're the closest, most recent in the institutional space, going back to your experience at BBH. What do you think is going on in rooms right now when you think about the macro sentiment, what we just discussed, all the things Marty went through? Then, independent of any belief in Bitcoin, this ETF thing has to be being discussed, right? What is that looking like heading into 2024?
I mean, I think for the most part, there's probably a good swath of the TradFi industry that believes that the Fed can engineer a soft landing, because generally speaking, they don't think about CPI and inflation like we do, and the long-term inevitability of these things. They tend to be more short-term oriented and trading oriented, and more so willing to ignore the long-term and focus on the short-term. So I think there's some element of that there. But to your point on the ETFs, I think it'll be very interesting to see how this plays out, because for a long time I've sort of thought, there's sort of functional mechanics that are, going to be positive for Bitcoin's price that come out of these ETFs, right? Like these issuers are going to be forced to go buy spot Bitcoin. But to me, the sort of almost more important point of these things getting approved is the shift in narrative and the shift in sentiment around this being a legitimate asset. And I think, for better or worse, the approval stamp of the U.S. federal government and the SEC on a Bitcoin product will go a long way in terms of forcing people to open their eyes to this thing and rethink their sort of preconceived notions and biases about it. So to me, yes, it's clearly going to be a positive near-term price catalyst when these things are approved. But the more important point is sort of the narrative shift and, being forced to think about it in the context of a portfolio, or the context of, other ETFs which may own Bitcoin. So that to me is what I've sort of anchored to as the more important outcome of what we're about to see in the next month or so. Is that narrative shift? Is that sort of, people being forced to wake up in a way to like, this thing is real. And there's now sort of a stamp of approval on it as a thing that you can own. But yeah,
Yeah, I love that. It's like FDA approval. It's like you're forced now to have an opinion.
Yeah,
You're forced, like from a normie perspective and an institutional perspective, you're going to be forced to have an opinion, whether it's rat poison or you might need to sprinkle a little bit on your 60/40 to make sure you can, hit your benchmark the next year.
Is this a whole new era for Bitcoin? Is this a demarcation line for what will be looked back on as like a pivotal point in Bitcoin's history?
If you're sitting on a throne this time next year, I think so. I was looking at you when you said that, and it's like if the background's like paved in gold, we'll know that the demarcation. If it's the same seat, I'm not sure.
Hey, this is a pre-1971 antique chair I bought specifically because it was bought before we went off the gold standard. It wasn't cheap.
That's cool.
It's very comfortable. From an antiquer in Charleston, South Carolina. Very great city. Nice. Good aesthetics.
But yeah, I think it absolutely will be a demarcation point. Largely for lack of a better demarcation point. You can point to the halvings, and I will continue to, as the real phase change from one era to the next. But from the mainstream perception of this asset, I think it will be before the powers that be blessed Bitcoin as being legitimate, and after. That's how it's going to be perceived and viewed historically by the people who aren't yet interested in Bitcoin in particular, which is the vast majority of people. And so I think that it's almost the AOL moment for Bitcoin, because with the internet, it started in 1969, I think. Maybe it was 79. And that was like the first real instance of the internet as we know it. And then it took from there 15 years for AOL to come along, roughly 15 years. And then AOL changed everything, right? It made it accessible. It made the internet go mainstream, because before then you had to deal with setting up your own server and all that, and connecting to the internet the hard way. So this will be that. This will be the AOL moment for Bitcoin, and it will only be clear in retrospect. And at the same time, it will be underwhelming the day, the month that it happens. I think it's just going to be clear that, the 2024 bull market into 2025, that I think is catalyzed by the halving and not anything else, but catalyzed by the halving, but amplified by a switch from QT to QE, and also amplified by the additional demand stream of ETFs trying to pile capital into Bitcoin. All those things will be happening next year, and that'll matter a ton to amplifying the bull market that ends up happening, I believe. But it won't happen day one. It won't happen month one. It'll just be clear in retrospect.
Thanks for tuning in to The Last Trade. If you're enjoying the show and want to dive deeper, check us out at onrampbitcoin.com, where you'll find a full suite of institutional-grade research and analytics, including our recently published white paper, Bitcoin's Full Potential Valuation, and our new tool, the Onramp Terminal. Now, back to the show.
Yeah, I'm curious what you guys think about sort of the juxtaposition of this one on one hand, you have this regulatory stamp of approval that seems imminent, but at the same time, you have the Elizabeth Warrens of the world proposing bills that are pretty purely an attack on Bitcoin and people's rights to use Bitcoin. And I think, I've been wrestling in my head with the past week of like, okay, what are the silver linings of something like this? And I think there are a few. I think one is, Elizabeth Warren's position has been anti-Bitcoin, but also pro-CBDC. And I think that's a pretty easy argument to win in sort of the realm of public perception around CBDC as being a potential terrible path to go down in terms of sort of the encroaching surveillance state. So that's one element that I think we have sort of in our favor. The other one is like, if something like her bill were ever to be passed and put into law, I think, ultimately we still have courts in this country and people will have to fight these things. And I think ultimately it comes down to like, the Second Amendment is on our side, or, the First Amendment is on our side in terms of free speech, and code, is speech. And I think that's a fight that we'll eventually have to take on. So I would say like, it's just an interesting time because, on one hand, we have these approvals coming, but at the other, at the same time, we have, some real sort of proposed attacks. People have talked about Elizabeth Warren's poor track record of getting bills passed, but just the existence of something like that. I've just been trying to think about the ways in which, maybe this is actually a good thing in some sense. Like, if the Elizabeth Warrens of the world weren't crafting these bills, I think you could make the argument like Bitcoin wasn't working as intended. Like the fact that someone is coming out and trying to, attack this open source, globally accessible network with a bill that, at the end of the day would promote a CBDC. Like to me, that's actually a strange indicator that like Bitcoin is doing something right. And it's a fight that we're going to have to fight. So I would say we're still firmly in the then they fight you stage of things here. So it's just an interesting juxtaposition given like the ETF excitement. But curious what you guys think about that.
Yeah, I do. I want to chip in with it. This makes me think about a quote from the cypherpunks, the early cypherpunks of the government is not a monolithic thing that is your enemy. It is a multitudinous thing that is your enemy. and I think part of that is like Elizabeth Warren is trying to fight Bitcoin in her way. And there are other interests that are approaching Bitcoin in different ways, some fighting Bitcoin, some neutral. But I think there's also like a capitalist element that wants to make money off of Bitcoin. And that's the Trojan horse for, how Bitcoin eventually wins, is that there's this incentive for people to make money by adopting Bitcoin. And so people will do that. And Larry Fink is one of those people, in my opinion. And that, makes Bitcoin available to a broader slice of the population. And yet it does come with some problems of, is it actually Bitcoin? But it will open up a lot of people's eyes to Bitcoin being a valuable asset. And some people will take their Bitcoin off of an ETF and go buy real Bitcoin. And now we have more Bitcoin adopters. But all that to say that I think we're kind of in a race between interests, people who want to kill Bitcoin and people who want to make money by harnessing Bitcoin for their own ends. But as we all know, ultimately, you don't. Bitcoin doesn't serve you. You end up serving Bitcoin by spreading the message of Bitcoin.
I'll take this in a slightly different direction, in which the timing of all of this, whether it's the imminent ETF approval and the posturing from the Treasury and Elizabeth Warren and her like, I could see it like being the attack where you have Elizabeth Warren pushing this bill, and yes, she's had a piss poor record of actually getting these bills passed, but it does seem like she's got a lot of co-signers on this particular bill and some narrative momentum using bunk data, which we've talked about in the past. And I could easily see a situation where the ETF gets approved, this law gets passed, and then Elizabeth Warren's like, yeah, you can have your Bitcoin, but you can only access it via these avenues that we deem appropriate. So that's what I worry about. And then they fight you. And then stage materializing. And I could easily see that happening in the next 12 to 18 months, which again, we've been saying this on Rabbit Hole Recap. That's the disconcerting. It's a disconcerting idea because BlackRock could come, get approved, all the other ETFs approved, bags pump miraculously. Everybody's all fat and happy and rich. The law gets passed. Then people are like, maybe it's okay. Maybe we can just get the ETF. I'm rich. Whatever. It's no sweat off my back. I've got all my money. And that's the ethical, mental, moral dilemma that Bitcoiners, I think, are going to face in the next 2 years. Is you're going to be extremely wealthy if you got in early enough. And the government here in the United States is going to attack it and create these avenues. Theory, this is my theory. I think it could happen. And then we're going to have that sort of decision to make. Are we going to bend the knee and say, all right, I'm rich. I'll just have my Bitcoin in the ETF and live off my gains? Or are people going to fight for the freedom to actually hold Bitcoin and possess it yourself outside the purview of the state?
Yeah, I mean, I think the beauty of it is, like Jesse referenced, this whole thing's aligned based on incentives. And so everybody's going to do what they should do, and they should do it. This reminds me of the same conversation, different scale, but ordinals and transaction fees. It's like, at the end of the day, people are just going to use Bitcoin what it was for. If it happens, it happens. People are going to give it up. They're not going to give it up. The reality is, talk about like prohibition, and they could never ban booze. And Bitcoin is infinitely more valuable than booze. So nothing's going to be banned. It's just going to be harder to use, and everybody's going to have their decisions to make. But at the other side of it, it's like, in my mind, it feels like water. It just like flows down one way, like gravity goes. And so these are just periods we have to live through, and everybody makes their own decision, and they go through it and you do what's best based on your incentive model. But that's part of like the beauty of like Senator Warren probably has like Bitcoin eventually, and then that's how we get her. And it's just a natural progression. But it's very valid, like on Marty's side, what he's referencing, because it very much could happen. But at the same time, that's when you go back to states' rights, and are they gonna be able to tell? Like in my mind, it feels, we were having discussions last week with people working with the politicians in Texas, and they referenced over 50 the Republicans that are traditionally like against Bitcoin, but they're looking at the angle what Brian said about, well, it's basically freedom money against like CBDCs. And so these things will ultimately happen. And then it feels like Texas taking people's Bitcoin seems very similar to saying like, we're taking your gold at this point. And so we are going to start to see those states' rights go, and that we're already seeing people move to these certain places. So I have hope that independent what happens, the market will kind of settle itself out. And while it won't be, seamless, we'll be on the other side of it eventually, and everybody's gonna be better off because we're gonna have a tool that they can use.
No, I agree with that. And to be clear, like I think we're gonna win this battle, but I do think it is going to materialize. People can't control Bitcoin, and they're gonna try everything they can to stop it.
I have this fool's hope, I guess, that Larry Fink and people like him become useful tools, useful allies of Bitcoin, the Trojan horse metaphor here.
Uncle Larry's going to be like, you're going to siphon all the AUM of people holding Bitcoin into my funds? Yeah. Write the law, pass it. Lobby for that.
Well, yeah. There's that part too, I suppose.
I mean, the thing that we talked to this like 6 months in the summer about Uncle Larry. Like Uncle Larry, Uncle Brian over at Coinbase, like these guys are de facto, like, I don't even know if it's debatable, like extensions of the government. They've been blessed by them to operate. They hand over all the information when required, specifically Coinbase. They're the last exchange standing. So I don't know. I wouldn't definitely push back on like that. I mean, I just don't see how Larry Fink is pro Bitcoin at the end of the day.
Yeah.
I think he's pro his pocketbook.
Yeah, I think that's right. But, I don't know. This is the fool's hope of like, there's so many capitalists out there that want to use the American rule of law to say, this is a commodity and I want to sell it because I want to profit from it. And so that's my right. And how dare you try to take that away from me? I won't let you. And at the same time, there's a bunch of congressmen who start to allocate to Bitcoin. We already have a handful of them. It won't be Senator Warren. I think Senator Warren will be the very last one But it doesn't matter if we get her. It matters if we get 40 Congress people, to have a Bitcoin allocation because they're excited about the halving or whatever, or they want to have a hedge against the national debt because they become concerned about the national debt. And so it's that intransigent minority idea of like, you don't win by winning over the king of the enemy, but you win by slowly winning over the people until it becomes, impossible to go against the people's will. And again, that's the fool's hope of like, I believe that ultimately you can't go fully against, the strong, passionate and base that has numbers, sufficient numbers on any topic. And, like the kosher foods is like the classic example of the intransigent minority where like we all eat kosher foods because it matters to a tiny group of people, like kosher salt. We have kosher salt, and we all buy it, whether or not you know it, because it matters to a tiny group of people, and it matters a lot to them. And so I hope that Bitcoin falls into that category, and it's possible that I'm just falling for the fool's hope here, and Marty's idea of a monolithic, more sinister plot to end Bitcoin or subvert it is possible too.
Well, to be clear, they can't end Bitcoin or subvert Bitcoin. They'll just prevent Americans from participating fully.
Right.
And that's an important distinction, right? Because like going back to Michael's analogy of prohibition, which I loved, not only is Bitcoin like much harder to enforce a ban on than alcohol, but it's also a global, in Larry Fink's word, this is an international asset. So it's going to be very difficult for them to do anything that actually, impairs the network to any real extent. They're just going to, make Americans' lives much harder if they want to store their value in Bitcoin. And that's unfortunate, but I tend to be somewhat optimistic like Jesse is. Like, I think our numbers are growing in terms of, Congress people who understand this thing and are, hopefully going to be willing to fight for it. Because the sort of facts and narratives are on our side at the end of the day. Like Elizabeth Warren is quoting literally false data to argue her point. It's just a matter of time. It's a matter of continuing to shift that sentiment. Bitcoin is good for the world. It's freedom money. And the reality is what Elizabeth Warren wants to usher in is a much scarier future.
Yeah, and to be clear, like what Jesse referenced, I believe like the intolerant minority, all of the margins will accrue and it'll move over. What I was referring to is I think like when we get off this podcast, there's like a group chat with Jamie Dimon, Warren, Brian Armstrong, and Larry Fink, like all just joking around about like what's going to go down next week at the Christmas party or whatever. Like that's what I'm referring to. It's like to think that they all have a certain like agenda. Maybe it's not lockstep, but that's kind of like the angle. It's like I don't think those are our friends. I think we have friends, but I don't think it's any of those four.
No, I don't either. They have ulterior motives, if you will. But I want to be clear. I'm very optimistic too. I think we'll win this battle. I think the incentives are too strong.
Right. Our friends are the incentives, right? Our friends are the incentives of Bitcoin plus the First Amendment. And so long as those two things are in place, like Bitcoin prevails, I think.
I don't know if you've checked in on the federal government, but they don't really like the Constitution that much anymore.
Yeah, the First Amendment is being encroached on in various ways, but I don't know if that falls. If the heart of the First Amendment falls, then the U.S. has completely fallen, and I have faith that Americans care deeply about the First Amendment, and maybe that faith is misplaced because the government has rather effectively hoodwinked on a variety of topics in the last decade or so. But I still have to have that faith. I can't live in a world where I don't have that faith.
Yeah, and to be clear, anybody listening to this is like, all right, these guys are like getting too deep into the weeds. This is one thing Bitcoiners love to do is think adversarially. There's a spectrum of potential outcomes to all of this, and in the Bitcoin world, it is suggested to think as adversarially as possible, worst case scenario at all times. That is what's going to make the network as robust as possible. If you're designing products, companies, protocol upgrades with that most extreme adversarial outcome in mind, like that is what's going to make the network the strongest in the long run.
Rationalists. Bitcoin rationalists.
No, I think rational is somewhere like more in the middle of the spectrum, where it's like, yes, this adversarial extreme outcome does have a potential to materialize, but it's likely that the incentives that Jesse and Brian mentioned really do play out, and it doesn't get as extreme. But with that being said, you should always design and plan for the most extreme, which is part of what we're doing here.
I was saying rationalists mainly from the topic calling ourselves Bitcoiners, but to your point, Marty, it's actually important in the sense of this comes up a lot with people that are very rational. I mean, they just are curious. They understand the power of changing money means and what it means to power structures, and they're concerned when they make an investment on like, what does the landscape look and how does it change and what are the trade-offs and what are the risk factors. So it's relevant. We probably have to be a little bit better in referring to it as a battle and the enemy, but at the end of the day, it's still it's relevant and it's important to talk about and just know what's at stake.
Which actually providing a good segue for what I wanted to talk to is like building a company with these regulatory landmines in mind, like you just mentioned. Like we see this all the time at 1031 with prospective investors. Like what happens if the regulators come and shut this down? Like how do you advise your portfolio companies to act in that situation? And that's one thing. Like going back to the incentives, like I think everybody on this show believes that the incentives are going to win out at the end. And as somebody who's building a company or allocating money to companies building in the space, like you have to have that long-term vision. Like the incentives are going to win out. Yes, it could be a very bumpy ride at times, but that's why it's called risk. You take the risk with all this information in mind and have that long-term vision of this is inevitable in my mind. The world's going to get better money for the digital age. That cuts out central bankers like that. It is a step function improvement on the incumbent monetary system that will be recognized by the market in time. And yes, there will be ups and downs in price and ups and downs in the regulatory environment, but in the long run, it will win out. And that's why you go and you build and you weather the storm as it washes over you.
Yeah, I mean, the crazy part with that is like, we can all pretty much say here safely, and you can look like Bitcoin's been deemed a commodity. Like you're pretty, if they decide to ban or take draconian measures, like that's unprecedented, but you can live with that. Right? It's like effectively, if you're building a gold company, they just decided one day to say that. But what's scary is like the crypto stuff. Because like, what's an unregistered security? Like imagine building on that. And there's a lot of these ETF providers that are actually like, having funds that have baskets of this stuff. And who's your counterparty? Like that's the thing that's actually more when you think on the risk curve, and there's pensions that have allocated and all this stuff is, we've seen it. It's not even vaporware is not even, I don't even think it's too far stretched to say like a lot of this stuff doesn't even have, we've seen it go to zero. And that's the crazy part from like, building. How do you manage it?
I wanted to ask you guys about this because it's something I've been thinking about. Like, there have been, a few different Ethereum ETF proposals put out there. And I was thinking about it, and in my mind, like those are actually, I mean, who knows if they get passed? Who knows if they get, more scrutinized than the Bitcoin ETFs or less so? Would be interesting to see. But I think in some ways, like it's almost a Trojan horse of sorts for people to more deeply understand the difference between proof of work and proof of stake. Because in order for these things, an Ethereum ETF to exist, you kind of need to dig into the details of how proof of stake works. And so whether that's regulators, these asset managers, or just the general public, like I think how that plays out will be very interesting to watch, because it could be sort of this interesting Trojan horse scenario where it actually forces people to more deeply understand the differences between proof of work and proof of stake, and why maybe there could be more reluctance to allow a proof of stake based ETF.
I hope that's true. I fear it. like, if you're, I don't know, if you're setting up like a corn futures product, corn or soybeans or potatoes or whatever, it doesn't necessarily mean that you're going to like learn more about corn farming, or what's in a soybean. You're just focused on packaging that up and creating a new market product. So I don't know, but it would be great if that is how it plays out. I'm skeptical that people dig into these assets more than what they need to create a Wall Street product.
Well, that's a very interesting point, Jesse, because the people who do dig into that, just thinking back to my days when I worked at the Managed Futures Fund, it's not the people providing the vehicle to get access to these financial products. It's the people trading those products. So like going back to like commodities like corn, wheat, like
right.
BlackRock has a commodities
They learn
ETF.
more about it. Yeah, that's right.
They don't care about what's happening in the price. They just have this vehicle to get fees from. But the people trading it are going to look at weather patterns in Brazil and how much rain is falling in Kansas for Kansas red wheat. They're going to look at coffee funguses growing in Guatemala. Like they're going to be doing those deep dive research to actually trade that product, hopefully profitably. But the person providing that product is not doing that.
Yeah. So in that sense, Brian might be right. And I just was thinking about the wrong cohort there. Like you're right. It's not about the people who sponsor these vehicles. It's about the traders who then do their diligence in order to make money on that market.
I'll take the other side. I think I had this fascinating conversation with an investment banker that's far down the rabbit hole. And it came in context. There's a few tweets, Marty, you probably saw last week. One that I saw from Phil Geiger, Diamond Hands. He said, you spend money when you're done using it. Spending money isn't using it. I don't make the rules. And I think he was referencing another tweet from Bitstein or Pierre, which was referencing Mises. But effectively this idea that you hold a better form of money, that's the form of using it. And then when you spend it, it's when you're done with it. And this idea of yield. And so these ETFs, like I could see an Ethereum ETF, passing whatever the setup or mechanism is to pass on what I don't even know what is, like you stake it and then you get some form of yield based on it, or other ETFs that offer some dividend. And it's this trick that that's been played on. You're looking for yield because you're a sucker if you're not using the money to generate more money because everything else is inflating away. And that the alpha or asymmetry, this is something we talk about a lot when we talk about like our products and go into the market, is like the alpha and the yield is the money. You just sit on it and you sit on your hands and you don't do anything. And so to the point of these other ETFs, they'll come about, Ethereum and pass on dividends, yield. I think that will actually play the opposite role, similar to an ETF that will offer some other kind of like exotic mechanics that try to get you a return above the spot price of BTC, because it's just a natural state of how messed up everything is that we've never had since our, relative time being alive in the market, that you have a form of money that should appreciate in value based on its deflationary mechanics, similar to what gold did and what we see Bitcoin doing. So anyway, I think like other ETFs and cryptocurrencies ETFs, if they pass on additional kind of quote unquote dividends, it'll play to the opposite effect of like going to Bitcoin.
I love that mechanic because it's so frustrating how it works. And I have to admit that I fell for it when I was in crypto land and still interested in altcoins. Was these altcoins generate their new yield staking, proof of stake models, and you're projecting based on the current market value of coins what additional newly generated coins that are dividended to you are worth, right? So you're taking that snapshot and projecting forward in time based on how many units there are today and how much each unit is worth today. And you're calculating how much income you're going to be generating just by the staking yield. But it's a moving target because as those new units are actually produced, the total supply has shifted. And so, in all else equal, each unit becomes worth less and the total value of the system remains flat. But now you're yielding less than you were originally envisioning. And that's such a subtle sleight of hand that I think all of this proof of stake bullshit rests on, that people will fall for until the market bears out that it was a bad idea in the first place.
Yeah, maybe I'm too optimistic on that point. But generally speaking, like it is, it's been interesting to see the past couple months, like you start to see a little bit of that retail mania coming back to markets, particularly in like altcoin land. And it's been even more interesting to see that a lot of that activity in the past couple months has been like the Solana ecosystem. So it's like this weird dynamic where it's like, oh, Sam's in jail. Now his ecosystem, his beloved ecosystem can now flourish. And you're seeing people on Twitter, praise the tech. And in Marty's words, it's all a bit tiresome at the end of the day. But like, do you guys think we're going to get these altcoin cycles in perpetuity? Do they ever go away? Or does it end up just ultimately being a retail only phenomenon and institutions don't dip their hands in the latest dog token, but there will always be that segment of the market that is looking for essentially a casino type environment?
Yeah, my take on it is that so long as we're moving through the adoption curve, aka for the next several decades, the next incremental slice of adopters will fall for some sort of affinity scam.
Right.
And so that I think will happen. And simultaneously, they will get more and more exotic as the first affinity scam was Litecoin, right? Silver to Bitcoin's gold. And that's at the heart of money, and it didn't work. Right. And now several generations later in the affinity scam, you're talking about Solana, Sushi Coin.
Solana's got a phone.
Yeah. Solana phone. You gotta spin up these weird little products in order to drive demand. And so I think that the trend of increasing strangeness and distance from the core value proposition of Bitcoin will also continue.
Yeah. And pull up the tweet from Alex Leishman, CEO of River. Incredible company. Just really respect what they're building.
Their new product is fantastic.
Riverlink. It's
Do you want to read it, Marty? For
yeah,
listeners?
So this is Leishman's tweet is ETH looks like it's on a trajectory to become a no man's land middle ground blockchain. It's subpar money compared to Bitcoin and subpar technology platform compared to Solana. So building on Jesse's point, that's Solana's the new Ethereum. Ethereum had the robust scripting capability in the world computer, the virtual machine meme, then the eventual transition to proof of stake, and then they sprinkled on ultrasound money at the end to compete with Bitcoin on that, and they just got completely just bulldozed by Solana, and will be, I think, this cycle, because Solana does everything that Ethereum wanted to do from the gate. They just rebuild it from scratch at a later year. It's faster, proof of stake, it's got a phone, and then Ethereum's going to be sitting there trying to compete with Bitcoin and Solana, and Bitcoin does money way better than Ethereum, and then Solana does all the fugazi sort of mystical things that you don't need a blockchain for better than Ethereum does.
Yeah, it's a good question on in perpetuity, but definitely have a few more cycles. And what Jesse said is probably one of the most valid is institutions, when they look at cash flow analysis or whatever, a new cryptocurrency spitting out is going to map to how they would evaluate another asset class versus Bitcoin, where it's just, you just sit on it. That's insane. That's dumb. You just buy it and lock it up, and then it just appreciates forever. What kind of black magic are you trying to sell me,
Yeah. Yield is a pretty evergreen allure, and that's a siren call that will get everyone who's new to blockchain, Bitcoin. They'll fall for most people will fall for some sort of yield idea, whether or not they put capital behind it or not. And yeah,
but the wild part is the money is the yield. The money is the yield.
Yeah, I was going to say that Bitcoin's accused of like, oh, is it Yahoo and Google's right around the corner? Is this Alta Vista? That people try to say that about Bitcoin, but that's what's happening with these technology platforms. And luckily, Bitcoin is kind of immune to that problem because it's not competing on technology; it's money, and so it has set its flag in this different use case, and it's damn good at it, and it has the network effect that cannot be matched in proof of work. And so like that battle's already won, but all these other coins are competing on technology, and they are all subject to this Alta Vista, Yahoo, Google problem. And yeah, to Michael's point, we'll see if there's like a Google that emerges as a dominant victor eventually, like a good enough technology platform for all the fugazi, as Marty said. But yeah, I wouldn't be surprised if we just see endless iterations of improved technology that allow these other new entrants to unseat the incumbent because they're flashier while competing on technology. Meanwhile, Bitcoin has money locked up.
Yeah, I agree. I think
go ahead, Marty.
I was gonna say I think the cycles continue, but as Bitcoin appreciates in value, the opportunity cost of messing around with the altcoins just gets significantly higher. And so I think it'll continue, but it'll get more and more suppressed over cycles. Like I don't think we'll ever see. You have
to learn, right? You have to learn that like, oh, there's a scam that happens every 4 years, and there's some new thing, and now there's a track record of like how many scam cycles do we need to have before people are like, well,
that's what we need.
You might not want to touch anything besides Bitcoin.
I mean, you mentioned Litecoin, and you had like Feathercoin, Purecoin, Steemit, you had Dash, then you had Ethereum, then you had the ICO boom, then you had the DeFi boom, then you have Solana doing their DeFi boom. Like, there's plenty of history. That's actually one thing Parker, his next book that he'll never write because he doesn't want to write it, but we need somebody to write like a historical book. Michael, we've talked about this with him before. Like we need the history book that like stamps all these scams in history and the people associated with them and just hand it to people like, hey, this has all been done before.
Yeah.
Charles Hawkins.
Yeah, I can't help.
Dan Larimer, Vitalik, all these guys.
I can't help but feel like what we're talking about is a symptom of like the money being broken. And I think it accelerates as the money breaks further, but then it comes back harder once you have a opportunity cost, right? Because you need your Bitcoin and people start to understand, and then better businesses are built and less people are chasing these crazy tail ends of how to get returns. And then you end up without all this, right? It's like people are playing with cryptocurrency the same way they're playing with the stock market and everything else on the end of the curve because they just have a bad form of money. And so they're just like, I fuck it. Like, I hope I can, whether it's a micro example of an individual that's trying to just like make ends meet and they're like, I have no chance. That's the same person that buys a lottery ticket, or an institutional investor that's trying to like just, make it big because they either have to hit a benchmark or they lost a bunch of funds. So it feels like we still have to accelerate, and then we'll like kind of decelerate into less of it.
Yeah, and that would be the adoption curve. That'd be the S curve of adoption of Bitcoin. Of that each incremental slice being new people coming in and making some form of the same old mistake until you've onboarded most of the world, and then they appreciate the opportunity cost of Bitcoin, and then you've reestablished true money and like. Return to a world of like sound finance and rational capital allocation.
Marty,
it could be several decades away.
Marty, I have a question for you. How does it feel for being around for so long, and you've been public about family members calling you nuts and just crazy, like to be looking at this money, but at the same time being like a Luddite, and that you're just like care about this dumb boring rock while there's all this other innovation happening, and why like you got to be more open-minded.
It's very frustrating, but you'll learn to live with it. It's hilarious. You're never right.
But doesn't it feel like just a crazy contrast, like two sides, and you're just sitting there like, fuck?
Well, because I forget. I mean, this goes back to like the uppy elite thing. It works in fractals, and it's not always the uppy elite. I saw like an interesting tweet thread the other week, but it was essentially like a startup founder who was like trying to tell his family that he had success, and they were just like, yeah, whatever. Like, I think, and it's just like the way humans are socially. It's like, especially like in familial situations, for some reason or another, a lot of people don't want to, they get a little jealous if somebody's succeeding, and they have to find like poke holes in it and be like, no, you're wrong. It's this other thing. Like the uncle that I showed Bitcoin to in like 2014, his son was shilling me Ripple in 2017. And he was like, yeah, he's into crypto now. Like, he knows what he's doing. I was like, all right. Don't want to spill the family too there.
I didn't know he was going to pull this up.
Where did you put that in? Where did you find that? I didn't even see that. Pull that
Somebody
back up.
just tweeted it out. Somebody literally just tweeted it out like 30 seconds ago.
Time to start eating all the canned goods I bought 2 years ago when Marty Bent said they were attacking the food system. Collapses in it. They have attacked the food system. You're eating industrial sludge. You're putting crickets in your food now.
It is a great example. It's a great example, Marty, of like, and I think this is part of what the yuppie elite are frustrated about when it comes to Bitcoin, is that people who are predisposed to see everything as like a crisis is imminent, or like, the society's going to collapse, and people who think in that way or are prone to that got to Bitcoin earlier and made a lot of money by, some of the earliest Bitcoiners who were like, shit's going to hit the fan and I need to get out of the banking system. And they bought Bitcoin, at $1. And that's like, that was very much wrong in 2010. It didn't, that didn't pan out that way, but it worked in their favor, and they made a fortune by being early to Bitcoin. And I think that is so that hurts the yuppie elite so much, to know that like people who are prone to like conspiracy theory thinking, or like,
what are you trying to say,
preppers.
Jesse?
Well, Marty, I think you're on that side of the curve. Got to Bitcoin first, and that is so maddening to an MBA or somebody who works in Wall Street.
Yes, and I want to be clear. I love my uncle and my cousin. Let's make that clear. But also, like, if you don't believe that men and women of power conspire to do things, I don't know what to tell you.
That's a good point.
Did everybody? This is a random, but it ties into this. Did everybody listen to the Tucker Carlson on All In podcast?
I did.
Or not really? Yeah, like
I haven't seen it yet.
It was very good, but there was a point there where they talk about people that make a lot of like wealth. They kind of destroy themselves, and like Tucker's experience with people and working through it. And there was a point I was like talking to my wife about it. I was like, well, they're caveating like people that are guilty that found fortunes very quickly in the same way somebody that bought a lottery ticket, or maybe, in a loose monetary society where you can like hit it big because you caught the right tailwind of like a startup or whatever it might be. And then you know that it wasn't there, or wasn't all you, and everybody's looking at you like a genius, and there's this like natural thing versus kind of proof of work and slowly making your way through it. And this, like, having this discussion, it kind of tied back to our discussion about like, where we're headed, and it's not going to be seamless. And I think that there's a part of it, and we've all probably experienced this. It's like, it's not really like we want to get to the other end of it and succeed in anything we do, but it's really like the journey is a big part of the fulfilling aspect of it, and like having these discussions and being able to help people and see that light bulb when it clicks for them. So I think like, at least personally, a lot of this discussion, or we talk about like, it's not going to be easy, but it's like, it wouldn't really, not to be cliche, but like, or trite, but this is kind of like, at least me personally, what I'm most excited for. I can't imagine a better time. And while it may be a little difficult at certain points, it wouldn't be like really worth it to see all this like happen in real time. If it just like tomorrow it turned on, everything's money. Maybe like it would be nice to seamlessly transition that. I guess that would take, but it's reality is when we look back at this, when we get on the other side, it's going to all make sense and feel we're going to feel fulfilled to like have gone through it. So, yeah.
That's
how the Solana people think too.
I doubt that. No, but it's true. It's been a long journey. It's been a long decade. Which is crazy to think. But it's been fun. A lot of ups and downs. And that's what I think, having been in this for how many ever cycles, I think that's, Michael, to your point, the one thing I'm most proud of this year is I've worked the hardest I have since being in this industry to prepare for whatever may come next. And I think we all agree it's up and to the right, as has historically happened. And it's been a lot of hard work, a lot of hard decisions. And it will all be worth it, I think, at the end of the day for all of us.
Yeah, I think about 2021 and like the price ripping, and if it all just took off for there and that was it, like I personally feel a lot more unfulfilled based on what you just said. Like this past year, the things you've learned, the things built, like, well, it's not easy. You get on the other side of it, you're like, oh, I wouldn't change it for the world. And so it's like that happens to a lot of people, and then they look back and they're like, oh, this is like the whole idea of you get what you want, and then it's not really what you wanted. And that's the whole, like, the concept of it. It's going to take time, but it makes sense that it takes time, because if it was easy, then it's just like not actually what you're trying to get to the other side of.
I empathize with that point. I may never have left the TradFi world if things had just ripped in 21 continuously.
Yeah.
No, it gave me the opportunity to figure out what I actually wanted to do. And you know, the doldrums can be nice, to your point.
Yeah, Brian would still be writing about Chainlink at Coinbase.
Hopefully not. Hopefully I would have, that would have been tough.
No, I mean, maybe this is like a point to reflect on this year. Obviously, Bitcoin's up a lot, getting on the other side of the bear market, but it is that pressure, that stress, it does produce results if you're willing to put the work in. And I'm not trying to be some inspirational, like I'm like work hard guru right now, but personally speaking, yeah, like bear market has had a lot of stressful times for me personally. But it also forced me to be like, all right, how do we actually build a business here at TFTC at 1031, and prepare for the next inflow. And that's what I'm most excited to see is a lot of the companies Onramp, obviously, you guys have been sprinting hard for the last year, getting everything up, like all the hard work you guys have been put in, all the hard work of many other companies in the space. We mentioned Alex and River. You mentioned that product they dropped last week, Jesse, that Link product. I could see that being massive in the bull market. Like just seeing everybody who's been in this for so long building, and knowing a lot of the people in the industry, talking to them behind the scenes and knowing they've been going through similar stresses. It's funny, your stress is tightly correlated to the price of Bitcoin. And it's inverse. The lower it goes, the higher your stress, the higher it goes.
Yeah.
The less high your stress is, but still a little high. A lot of people have been working hard. I'm just extremely excited to see all that work pay off in the next cycle.
Yeah, here's to a stress bear market for the next year.
We getting too gushy here, boys?
No, I was thinking about you. Made me think about Michael Saylor did it in one of his many interviews. Had a great little bit about. I think he said 50% CAGR annual growth rate is about as fast as any asset can monetize, and society can process that. And I think his point there, the kind of hidden point there, is really profound. Of like this is a human process that's playing out, and all of our individual psychology has to update to what Bitcoin is and is becoming and how it changes over time. And then all of the systems that we build as a group, as a society, like the businesses, the institutions, the legal code around a particular asset have to be updated and built. And that process takes time. And so that 50% mechanism, which manifests as these bull markets that turn into mini bubbles and then crash, to wash out that inflated optimism and restore sentiment to like neutral. That has to happen in order to stop a 50% CAGR endlessly from becoming like overheated. Because if you got 50% CAGR every year, and then that 50% was reliable every year, people would speculate too much, and that's what happens. So the reset, the bear markets are just a reset of sentiment. You have to wash out the speculators, and then at the same time you have to allow for individual psychology and societal psychology, and systems and institutions to incorporate the amount of change that has occurred over the last few years, process it, and get ready for the next wave of change. So it's also beautiful how it just has to happen this way. Bitcoin can't go through the adoption curve any other way. It has to go through these little mini tulip bulb rallies every 4 years. There's just no other way, and it's beautiful.
Yeah, and that's actually really topical because we talk about it, like me and Cam often, because we were in the trenches onboarding individuals to multi-sig. And when you think about like where we sit today couldn't have existed without multi-sig operators like Akasa and Unchained, like that market awareness that this thing exists, just the concept that you could split up the keys. But then you add to that the FTXs of the world, that if you go 2 years ago, it's probably too soon to talk about multi-institution, because it's like, what, you can trust institutions. And obviously like Quadriga, Mt. Gox and others had failed, but not at the level that happened in 2022 when, we look at the top 5 to 10 firms in the space, or like half of them are in jail and the other half are insolvent. So there's a lot of examples like that where you go across the spectrum. It's like it had to happen. It was path dependent, and you just have to make sure you don't die along the way and you're around long enough to like learn and then just like continue to when the bear happens, rather than like, there's no shortage of TradFi folks that I talked to that were looking to go a like half did, or a lot did, and then others were like, no, I'm going to tough it out. And because on the other side of that is, obviously we know what happens, and then it just starts that next wave and opportunity base again.
Yeah, we're salty. We've been through it. I'm
tired. I'm tired, Jesse. I don't know about salty.
Tired of it all. Yeah, I don't think the people. I don't think the people building altcoins have these scars or perspective on like, this is a marathon. BlockFi was built by people who were sprinting to a finish line that, fell out before them. So it's very funny to think about, like, if you were to go on like an altcoin podcast and ask about like the sentiment there, I think people would.
The market's wrong.
General sentiment would be like, yeah, the market's wrong, and everything is about to change, and we're about to enter a new paradigm where Solana takes over, and versus this kind of measured approach that we all have here of like, yeah, Bitcoin's going to have another bear market, and it's how it's going to go.
Do we see a bankless pivot during this bull market?
They make too much money to ever update their reality.
I don't know if what Alex Leishman tweeted materializes. Solana pumps. They could become a Solana podcast at some point.
That I could see.
I could see that.
That's what you're saying. Yeah. Bankless has upgraded from Yahoo to Google, and Google is Solana, and now we all are a Solana podcast. I could totally see that.
Yeah. It's the funny thing, like you mentioned, they're very successful. There's something about the altcoin narratives that really catches people.
I do think everything we said may be the old world. I think we see the same stuff, but we see it around like securitization of assets and whatever they do in stable coins and like interesting exotic ways. Like I think we'll see new institutional flavors of what we just described. I don't think it looks exactly like the crypto. I think we see the institutional version of this stuff.
I don't know if you.
Well, it has to be that. If it spreads to the institutional world, it has to be something like that, because like they're not going to buy the new dog token. I mean, I hope they don't. But like, it has to be a different flavor for the institutions relative to like the retail focused mania, because the sort of continuing narrative there is just like meme coin, like no actual value, just let's speculate on this thing going up. And so there's new dog coins, some old dog coins, but yeah, it's got to be a different flavor if the institutions latch on.
But we did see like jump in Terra Luna, which is effectively what you just described. That was the closest we've gotten to it from an institutional kind of level.
Yeah.
And Terra Luna.
There's nothing stopping like JP Morgan from spinning up Ripple 2.0. Like what's the value proposition of Ripple is like that this is going to be some interbank currency, but you could have that done by a bank and they could claim that we're going to do transactions this way and you create, but then they stake their whole reputation on it and that would be a whole mess.
No, I was going to mention, I see the stable coins being the Trojan horse in, and then they get exotic. They'll try to like securitize mineral rights using a blockchain and track the flow of natural gas from upstream to midstream to end a market using a blockchain or something like that. But on that note, like, did you guys see this week, like Tether coming out, freezing addresses, going full, we're going to be OFAC compliant? Like,
I did not see that.
Maybe the pirate of the industry turns into the darling of the TradFi world. Sort of, it seems like they're beginning to position themselves as a competitor to Circle in regards to being regulatory compliant. I don't know. It could be wrong. Brian, I saw your eyes rise there.
No, it was definitely an interesting twist. It's not something that I necessarily expected to see. I wouldn't say necessarily that means U.S. regulators are going to cozy up to Tether and the boys. Like I think their preferred stablecoin will probably still continue to be Circle, but it was somewhat of a surprising development.
I mean, isn't kind of like a good chance Tether is already cozied up? Like, how do you manage that much treasuries and like those go through coordinating banks? It sits at Cantor Fitzgerald.
His CEO was on CNBC pumping
that was
Tether.
A great clip.
Like, I love Tether.
Did you hear the clip where he referenced, I don't know if it's the same one, but where he referenced like Bitcoin, love it, all the value props. And he's like, yeah, Ethereum, like Joe Lubin can just turn that thing off whenever he wants.
Yeah.
I didn't hear that one. That's awesome.
Yeah, the guy, I forget his name, CEO of Cantor Fitzgerald. He seems to get it.
Yeah. Or, that's a perfect example though of like, there's a guy who can make money by partially defending this whole industry, or at least like, trying to put a little bit of weight behind like, yeah, we should allow this. And, CEO of Cantor Fitzgerald doesn't have no influence. So add up all of those guys. And that's, I think, how you can overcome the Senator Warrens.
Yeah. All right. We got to wrap up here soon. 2024 predictions. Who wants to start? Let's give 3.
Ooh, 3 each? Or 3 together, all together?
3 each.
Okay. So, all right, I'm not saying that this is what I think will happen, but I'm saying that I wouldn't be surprised if we have a end of year peak, which would be way faster than I think most people are thinking. Like, it's possible in my mind that we have a end of 2024 peak, and that would be kind of just an extrapolation of how cycles have been, bull markets have been getting faster. In 2017, it was an 18-month bull market. In 2021, from having to enthusiasm peak, which I'll say was spring 2021, that was 11 months. And so it's possible that we have like, another rapid bull market, which would only happen if the market is starting to learn, okay, halving happens, bull market happens. And so I need to pile in and not waste any time. And so that could be a trend that's happening here. And so I'll say that would be a possible prediction for 2024.
Oh, you got 2 more.
Let's do it. Let's go around the horn so I can.
Okay, we'll do one. We'll do one each. All right.
I think I would say we'll get at least 1 to 3 more nation states come out in support of Bitcoin, whether that means they announce mining operations or just, it as, recognizing it as a currency in some way, shape, or format. So 1 to 3 new nation states added to that short list of countries that support Bitcoin. And then we're going to have Jesse do a 24-hour live stream of the halving, and his shirt is off by hour 21.
That sounds good. Just so long as that block reward gets cut in half. Thank you very much.
2024, we see at least one larger entity play in the space that ends up at the same fate of as in 2022 that gets caught off sides, whether it's with custody or some form of counterparty risk that brings back to the forefront, why custody matters.
Yeah.
Okay. Got a bold one here. ETF does not get approved in January.
Okay.
So just not January. Still approved during the year, but just not January.
Yeah. I think it'll get approved in March. Could be wrong.
That's possible.
That and we'll hit 6 figures.
Ooh,
Yeah.
in 2024?
Yeah.
Man.
6-figure Bitcoin's like different paradigm though. Like that's the real just heady kind of everything changes. Like,
Are you ready for a different paradigm, Michael? It's going to happen in 2024. It has been predicted.
but that goes against like the thing with Jesse referencing. If we hit 6 figures in 2024, I don't think we peak at the end of the year. Like I think it's ripping for a while.
No, Bitcoin never peaks. Okay.
Or I mean like this, but I mean this cycle, like it doesn't hit 100K, whatever, 120. And then it just like we go into 2025 roaring.
We're going to rip 700 at least. No, I'm just kidding. No, I'm just getting bashful. ETF is not going to
by
approve.
conference day.
Yeah, 700 by conference day.
This isn't financial.
ETF does not get approved. I bet we touch 6 figures at some point next year.
I think that we'll have at least one other Fortune 500 company add Bitcoin to their balance sheet.
That was going to be my other one. Some more corporate adoption is likely.
Yeah, specifically because of the FASB rule, which Michael Saylor's very excited about, and nobody else seems to like appreciate just how big of a deal it is. And Michael Saylor's right. It makes it possible for everyone to see the MicroStrategy playbook and be like, oh, well, I want to mark to market the value of my holdings in a Bitcoin bull market and record those as profits. Like everyone's going to want to do that or should want to do that. So hopefully that begins the real adoption by corporates.
800 exahash. My second.
Wow. So doubling
Third.
hash.
Not quite double. It's at
Not
like
quite.
500 right now.
Yeah, I'll piggyback on that and like more nation state vertical integration of mining, whether it's nuclear, whatever they're gonna go. Like I think UAE, Latin America, we're gonna see a lot more firms tap into that, or countries.
Okay. I'll predict that we won't have an all-time high until Q4 next year, which I think is later than a lot of people would be thinking. I think we're going to be surprised again by how much of a non-event the halving appears to be. When it happens, and then for several months following.
You just contradicted yourself.
Nope, I didn't.
Yeah, I thought we were going to get
Appears to be a non-event.
Appears to be a non-event, and then, but beneath the surface, the available for sale supply of Bitcoin is being eaten up by the demand that is no longer fully satisfied by newly created Bitcoin. Right, so
that would be reflected in price.
What's
Yeah.
that?
Wouldn't that be reflected in price?
Yeah, I think there's a lag effect. I think there's
We're not that far from
inertia.
all-time highs, though, Jesse.
Yeah, I'll take the other side. I think we hit all-time high before the halving.
And so, Brian, my I guess I'm just scarred by 2020.
You just try to hedge. You just try to hedge your predictions. I don't like your predictions have to be aligned.
Spicy predictions, kind of, they're both kind of radical of Q4 all-time high and also Q4 peak. So that would be like a 2017 scenario where we went parabolic in the last 3 months of the year. Yeah, we'll see.
BlackRock ETF just got a ticker.
I thought it already did. What's the ticker? Larry Coin.
I'll say also that
IBIT.
While I think that we could see a peak in 2024, it's not my base case. My base case is I don't know, Q2 2025.
It says BlackRock's proposed spot Bitcoin ETF, christened with ticker IBIT, and updated filings include new language about cash redemption versus in kind.
Breaking news on the last trade.
We're gonna need a special 2 weeks starting the year. Just ETF madness.
We got memes here already. I bet the corn and the corn won. I bet the corn and the corn won.
Marty, you want to or maybe Jesse? Jesse has a connection with Uncle Larry. If he wants to come on the pod and start the year.
You mean Larry Fink?
Yeah, Larry Fink, your buddy,
Yeah.
your buddy, the good actor, our savior, our Lord and Savior, Larry.
I'll just shoot him a quick message and say, "Hey, Larry, I've been saying that you actually like Bitcoin and that you're good for Bitcoin. So won't you come on our podcast?" I'm sure he'll answer that.
Send him your article you wrote with the structurally broken vehicle he created with a block of a wheel.
He'll love that.
Yeah, Larry and I are actually pen pals. On the next letter I write him, I'll throw out the invite.
Nice. An open letter to Larry Fink makes you a pen pal.
Yeah, he's so old school. He doesn't even use phones. He's big in the written word. Pen to paper.
Flight to quality.
Flight to quality. Gentlemen, a lot to be thankful for this year. I mean, we started the show going strong. Most podcasts don't make it past 3 episodes. We hit our
30th last one. This is
we hit 30th. I was gonna say we were in the high 20s.
No, yeah, we hit 30. I was looking at something. Yeah,
it's our 31st episode. We bucked the trend. It's been a great time, week in, week out, talking with you too, Brian a couple times, other guests. Still working on my my outro for this. I'm gonna try it. We wrap up today, but it's been fun.
It's been.
I think people are getting value out of it.
Yeah, that's my prediction for 2024. Actually, is that Marty will figure out his outro for this podcast.
This is the last trade, but this is not the last episode of the last trade. We'll be back next week.
Next year.
Next year.
2023.
I fucked it up already. All right, we'll try again next year.
We're gonna respect everyone's family's time. Oh, we're out.